ExamPrep.School, Maine Life Accident and Health Insurance Producer Exam, exam code 12-ME-1. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Accident and Health, General Knowledge. Life, General Knowledge. Maine laws us rules common to life, accident, and health. Maine laws are rules pertinent to accident and health only. Maine laws are rules pertinent to life only. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which statement best defines term life insurance as compared to other life insurance forms? A. Offers pure insurance protection for a specified period without any savings component. B. Provides level death benefit along with cash value accumulation during the policy term. C. Permits periodic premium adjustments based on updated mortality costs. D. Guarantees return of all premiums if no death claim occurs during the term. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. Term life insurance provides a pure death benefit for a defined time period and does not build cash value, differentiating it from permanent policies. Reason B is not correct. This distractor describes whole life characteristics, since cash value accumulation does not occur in term insurance. Reason C is not correct. Term life premiums are fixed for the initial term period and are not adjusted periodically based on mortality cost. Reason D is not correct. A return of premium feature is an optional rider rather than an inherent guarantee of term life insurance. Question 2. In term life insurance, the convertibility feature allows the policyholder to A. Extend the term coverage beyond the initial period while maintaining the same premium. B. Convert the term policy to a permanent plan without providing evidence of insurability. C. Receive a partial cash surrender value upon conversion. D. Transfer coverage to a different insurer under the same contract. The correct answer is B. Convertibility permits changing a term policy into a permanent life insurance policy without further underwriting evidence. Reason A is not correct. This describes the renewability feature, not the convertibility feature. Reason C is not correct. Term policies do not accumulate cash value and therefore offer no surrender value upon conversion. Reason D is not correct. Policies cannot be transferred to another insurer under the same contract. Question 3. Which description correctly characterizes a decreasing term life insurance policy? A. Premium declines each year while the death benefit remains level over the term. B. Death. Benefit declines periodically according to a predetermined schedule while premiums remain level. C. Level death benefit with periodic increases in cash value. D. Return of premium paid at the end of the term if no death occurs. The correct answer is B. Decreasing term policies feature a death benefit that reduces on a set schedule, typically matching a mortgage balance with level premiums. Reason A is not correct. This describes a different premium structure. In decreasing term, the benefit, not the premium, declines. Reason C is not correct. Term policies do not accumulate cash value, so this cannot describe decreasing term. Reason D is not correct. Return of premium is an optional rider and does not define decreasing term policies. Question 4. Term life insurance policies typically include an exclusion for suicide, which denies benefit if suicide occurs within how many months of policy inception? A. 12 months. B. 36 months. C. 24 months. D. 6 months. The correct answer is C. Most term life policies contain a 2-year, 24-month suicide exclusion, during which suicide results in refund of premiums only. Reason A is not correct. A 12-month exclusion is more typical of disability policies, not term life. Reason B is not correct. A 36-month exclusion is longer than the industry standard for term life. Reason D is not correct. A 6-month period is shorter than the commonly applied suicide exclusion in life policies. Question 5. When determining the annual renewable term life premium, insurers most directly base the rate on the insured's A. Length of the coverage period. B. Age at policy issue throughout the term. C. Occupation classification code. D. Attained age at each renewal. The correct answer is D. Annual renewable term rates are recalculated each year based on the insured's attained age and current mortality tables. Reason A is not correct. Coverage length defines renewal timing, but not the rate basis each year. Reason B is not correct. Level term policies use issue age, not annual renewable term policies. Reason C is not correct. Occupation affects risk classification, but rates are primarily age-based for annual renewal. Question 6. Which statement about group term life coverage provided by an employer is correct? A. The cost of coverage in excess of $50,000 face value is taxable to the employee. B. Premiums paid are deductible by employees as a medical expense. C. The entire cost of coverage is included in the employee's gross income. D. Death benefits paid to beneficiaries are reported as taxable income. The correct answer is A. Under tax law, employer-provided group term life coverage above $50,000 must be included in the employee's taxable income as imputed income. Reason B is not correct. Employee-paid premiums for group term life are not deductible as medical expenses. Reason C is not correct. Only the cost above $50,000 is taxable, not the entire premium. Reason D is not correct. Death benefits from life insurance are generally income tax-free to beneficiaries. Question 7. A decreasing term policy with an initial death benefit of $200,000 decreases annually on a level dollar basis over 20 years. After 12 years, the death benefit will be A. $20,000, B. $120,000, C. $80,000, D. $140,000. The correct answer is C. A level dollar decrease means 200,000 divided by 20 equals $10,000 annual decline. After 12 years, $200,000, 12 multiplied by $10,000, equals $80,000 remains. Reason A is not correct. This assumes a full 18-year reduction rather than 12 years. Reason B is not correct. This would reflect an $80,000 reduction rather than the required $120,000 reduction. Reason D is not correct. This reflects only a $60,000 reduction, inconsistent with 12 declines. Question 8. A term life policy's grace period provision typically extends coverage for how many days following a missed premium payment? A. 10 days. B. 60 days. C. 31 days. D. 90 days. The correct answer is C. Most term life policies include a 31-day grace period after a missed premium to keep coverage in force before lapse. Reason A is not correct. A 10-day period is too short. Typical grace periods are longer for life policies. Reason B is not correct. A 60-day grace period exceeds the industry standard for term life insurance. Reason D is not correct. A 90-day extension is not a standard provision for term life policies. Question 9. If a term life policy includes an accelerated death benefit rider, and the insured elects this option, which effect occurs to the death benefit paid at claim? A. It is reduced by the amount advanced under the rider plus any accrued interest. B. It remains at the full face amount since the rider is treated separately. C. It converts the policy to permanent coverage with a lowered benefit. D. It is paid directly to the insured without affecting the death benefit. The correct answer is A. An accelerated death benefit advance is deducted from the policy's face amount, along with any interest, reducing the amount payable at death. Reason B is not correct. The rider accelerates part of the death benefit, so the face amount declines accordingly. Reason C is not correct. The rider does not convert term to permanent coverage, it only advances part of the benefit. Reason D is not correct. Funds go to the insured, but they reduce the remaining death benefit to the beneficiary. Question 10. A 35-year-old applicant is comparing term life policies and asks the agent about expected fees, cash values, and conversion features. Under consumer disclosure requirements, which document must be provided at the time of application? A. Policy summary. B. Buyer's guide. C. Illustration. D. Annual report. The correct answer is B. The buyer's guide is the required disclosure at application for term life insurance, outlining fees, cash values, renewal, and conversion options. Reason A is not correct. The policy summary describes provisions after issuance but is not the initial consumer disclosure. Reason C is not correct. An illustration projects potential values but isn't mandatory as an initial disclosure document. Reason D is not correct. An annual report details company performance, not policy-specific consumer disclosures. Question 11. A 48-year-old applicant for a 20-year term life policy reports running marathons, but has a recent abnormal electrocardiogram. In evaluating underwriting factors, which finding is most likely to result in a substandard rating? A. Occasional elevated cholesterol levels. B. History of controlled seasonal allergies. C. Abnormal ECG indicating arrhythmia. D. Family history of hypertension. The correct answer is C. An abnormal ESCG showing arrhythmia represents a significant health risk and typically triggers a substandard rating in term life underwriting. Reason A is not correct. Mild or occasional cholesterol elevations may lead to a standard rating with a surcharge, but are less severe than an arrhythmia. Reason B is not correct. Seasonal allergies controlled by medication are minor and generally do not affect standard underwriting. Reason D is not correct. Family history influences risk but is less decisive than an existing abnormal ECG finding. Question 12. An insured purchased a 5-year level term policy and died by suicide 18 months after issue. The beneficiary submits a claim under the suicide exclusion. How should the insurer handle this claim? A. Pay a refund of premiums paid but no death benefit. B. Pay the full death benefit after investigation. C. Pay a pro rata portion of the face amount. D. Deny payment and retain all premiums. The correct answer is A. Under the suicide exclusion in term policies, death by suicide within the exclusion period entitles the beneficiary to a return of premiums paid without a death benefit. Reason B is not correct. Full death benefit is not payable when death occurs during the suicide exclusion period. Reason C is not correct. The policy does not pay a pro rata face amount under suicide exclusion provisions. Reason D is not correct. Premiums must be returned rather than retained if suicide occurs within the exclusion period. Question 13. A 64-year-old nearing retirement seeks a term policy to build cash value for estate planning. Which suitability practice must the agent follow before recommending a term life policy? A. Assess the client's financial objectives and retirement income needs. B. Recommend the policy with the lowest available initial premium. C. Ensure the policy includes a guaranteed conversion feature. D. Focus solely on the client's existing assets and ignore dependents. The correct answer is A. Suitability standards require the agent to evaluate a client's financial objectives, retirement income needs, and overall financial situation before recommending any policy. Reason B is not correct. Lowest initial premium may not align with long-term objectives and doesn't satisfy suitability requirements. Reason C is not correct. Conversion features are relevant, but assessing objectives and needs is the primary suitability obligation. Reason D is not correct. Ignoring dependents fails to gather necessary information for a suitable recommendation. Question 14. An agent proposes replacing a client's existing 10-year term policy with a new policy for lower premiums, but fails to provide the required replacement notice. Under replacement regulations, what consequence applies? A. The new policy becomes voidable by the client for 30 days. B. The agent may proceed but must file a late notice. C. The existing policy automatically terminates. D. The insurer must waive the contestability period. The correct answer is A. Failure to deliver the replacement notice makes the new policy voidable by the client within a specified period, typically 30 days. Reason B is not correct. Late filing of a notice does not cure the failure to deliver the required replacement notice. Reason C is not correct. The existing policy does not automatically terminate due to notice failure. Reason D is not correct. Contestability waiver is unrelated to replacement notice requirements. Question 15. An agent tells a prospect they will receive an expensive electronic tablet if they purchase a new term life policy. Which ethical violation has occurred? A. Rebating. B. Twisting. C. Concealment. D. Churning. The correct answer is A. Offering an inducement or rebate of policy premiums or valuable gifts to persuade purchase constitutes rebating, which is prohibited. Reason B is not correct. Twisting involves misrepresenting a policy to induce replacement, not offering gifts. Reason C is not correct. Concealment is withholding material facts, not providing gifts. Reason D is not correct. Churning refers to replacing policies for higher commissions, not giving gifts. Question 16. Which of the following best defines the purpose of the incontestability clause in a life insurance policy? A. To guarantee that premium rates remain fixed for the policy's first 2 years. B. To prohibit the insurer from contesting material misstatements in the application after a specified period. C. To prevent the policy owner from challenging any claim decisions made by the insurer. D. To provide an accelerated death benefit if terminal illness is diagnosed. The correct answer is B. The correct answer is the provision that prohibits the insurer from contesting misstatements in the application after the contestability period, protecting the policy owner's rights. Reason A is not correct. The guarantee of fixed premium rates describes a non-forfeiture or rate guarantee provision, not the incontestability clause. Reason C is not correct. The clause does not restrict the policy owner's right to challenge claim decisions. It restricts the insurer's contesting rights. Reason D is not correct. An accelerated death benefit is a separate rider, not the function of the incontestability clause. Question 17. Which characteristic is a key feature of an incontestability clause in life insurance contracts? A. Requires beneficiary consent for changing coverage options. B. Applies only if premium payments are made on an annual basis. C. Allows the insurer to contest fraudulent misstatements indefinitely. D. Becomes effective after the policy has been in force for a specific period, typically 2 years. The correct answer is D. The correct answer is the feature that activates the clause after a defined period in force, limiting contest rights once that time frame elapses. Reason A is not correct. Beneficiary consent for coverage changes is unrelated to incontestability provisions. Reason B is not correct. Premium payment frequency does not determine clause effectiveness. It is based on time in force. Reason C is not correct. The clause limits, not extends, the insurer's contesting rights after the specified period. Question 18. Which of the following describes a common variation of the incontestability clause found in some life insurance policies? A. Automatically extending coverage to all riders without additional underwriting. B. Substituting adjustment of the benefit amount instead of policy rescission for certain misstatements discovered after the contest period. C. Limiting the clause's applicability to the first year of the policy. D. Requiring full repayment of all premiums upon discovery of any misstatement. The correct answer is B. The correct answer identifies the variation that adjusts benefits rather than voiding the policy for qualifying misstatements, a feature in some clauses. Reason A is not correct. Extending riders without underwriting relates to rider provisions, not incontestability variations. Reason C is not correct. Variations affect the contest period but not restricting to only the first year. Reason D is not correct. Full premium repayment is a forfeiture concept, not a common incontestability variation. Question 19. Which scenario best illustrates a coverage limitation of the incontestability clause? A. An insurer pays a reduced death benefit due to a corrected age provision after the contest period. B. An insurer denies a claim for a material omission after the contest period, even when no fraud is involved. C. An insurer voids the policy after the contestability period upon discovering intentional fraud in the original application. D. An insurer reinstates a lapsed policy without requiring proof of insurability after the contest period. The correct answer is C. The correct answer shows that fraudulent misstatements remain contestable even after the contestability period, reflecting a limitation of the clause. Reason A is not correct. Benefit adjustment for age corrections is an exception under age, sex misstatement rules, not a coverage limitation of the clause. Reason B is not correct. Denying a claim for a non-fraudulent omission post-period would violate the clause, not illustrate its limitation. Reason D is not correct. Reinstatement requirements are part of reinstatement provisions, not related to incontestability exceptions. Question 20. To satisfy the eligibility requirements for incontestability protection, which condition must be met? A. The owner must waive the right to free look. B. The beneficiary designation must remain unchanged during the contest period. C. The policy must have been purchased as a group contract. D. The policy must have been enforced for at least the specified contestability period with all premiums paid. The correct answer is D. The correct answer states that the policy must remain in force with timely premiums through the contestability period to gain incontestability protection. Reason A is not correct. Waiving the free look right does not influence incontestability protection. Reason B is not correct. Beneficiary changes do not affect eligibility for the incontestability clause. Reason C is not correct. Group contract status is unrelated to incontestability eligibility. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.